What's up, guys? My name is Michael Baez. I'm the founder of Spark Bookkeeping, where we're drilling down your books so we can drill up your profits. If you're new here, I help entrepreneurial tradesmen with bookkeeping and tax, and I am qualified to speak about this because I'm a licensed CPA, and I have helped thousands of individuals and businesses minimize tax, save time, and increase their profit. A few weeks ago, I talked about the One Big Beautiful Bill Act, and what I went over is what changes are going to come about federally. What I didn't talk about is whether you will get affected by this in your state. So now I live in California, so I am going to go over today whether California conforms or not to the rules passed in the One Big Beautiful Bill Act. In this video, I will be covering 4 topics, and those are why California does or does not conform with the OB3, what this means to you personally. The third part will be what this means to your business, and the fourth part is what steps you can take to keep your taxes low. So the short answer, California does not conform with OB3, the One Big Beautiful Bill Act, as of right now. That is because of the conformity date that California has set. What the conformity date is California is saying we will follow what the Federal Tax Act have said as of a certain date, and anything past that date they will not conform to yet. As it stands, California actually is only conforming to tax laws from 2015. Anything after that, California has not conformed with. There's actually a bill called SB 711 that would take the California conformity date to January 1st, 2025. The problem here is that bill won't even help us. See, the One Big Beautiful Bill Act was enacted in July of 2025. So California would need to move the conformity date to July or past the date that the bill was enacted for California to conform. And because of this non-conformity, it's even more important to stay on track of all your taxes, keep all of your documentation, all of your support, because basically you're dealing with 2 different sets of rules. You need to keep everything that way. You can compare them against the federal rules and the California rules. All right, so what you are missing out on personally. So first is going to be the overtime tax deduction. So with the OB3, you can deduct $12,500 of overtime wages. Basically, you won't get taxed on that. That's if you're single. If you are married, filing joint as your filing status, then it would be increased to $25,000. For California, you would not get that deduction. You would have to pay tax on that income. The $1,000 charitable deduction that all taxpayers get, as long as they did some type of charitable contribution, give cash to some type of organization, you cannot get that for California. So you're going to miss out on that $1,000 deduction as well. Next is no tax on cash tips up to $25,000. So California does not conform. You will pay tax on that. Next is the deduction of car loan interest of up to $10,000. California does not conform. Again, obviously does not conform to any of it. So on the California return, if you did take the full deduction, $10,000, you would owe tax on that $10,000 for California. For California, normally it's a couple percentage, 4 or 5%. It's depends on how much income you have. It's a sliding scale. Next, we're going to talk about how this affects you from a business standpoint. If you do own a business, the California law does not conform with the federal in regards to the bonus depreciation. They never really have conformed with bonus depreciation. You can take Section 179. It's very similar to bonus, where you take accelerated depreciation and you're able to expense the cost of the equipment or the asset in the year you purchase, and you're able to basically get a big tax break on that. This isn't going to be as much of a problem because the 179 deduction will kick in. You will be able to take a lot of deductions on the assets. It is at a lower rate though, or not lower rate, but there's a lower limit. So there's a limit on how much you can take, and for California, it's even lower than the federal. The federal is at a couple million, so unless you're like a larger business, you won't really have to worry too much about hitting that limit. Another area where bonus comes into play is with listed property. Listed property is like cars, vehicles. It could be a couple other things that can be used in the business and personally. Any car you use, in the business, and you also use it for your personal use. There are limitations, and then once you get to that limitation, you're able to take additional bonus depreciation to take you to a higher deduction. With California, you cannot take that extra bonus deduction. So if you can tell already, taxes get pretty complicated, and then when you have to factor in, you have federal rules, laws, and you have state rules and laws, and you live in a state like ours, California, you do have one of the most complicated state tax laws. So it's very important that you keep detailed records. You do any type of financing, you get a car, anything like that, you want to keep all your records. You can keep them digitally if you don't want to keep a bunch of papers, but definitely keep everything you can and give them to your tax preparer at the end of the year. More is better because they'd rather have something and save you money. I mean, at least me personally, I'd rather look through a couple extra papers and make sure I have everything than not save you some money. Also, for those of you who think, oh, I can do the taxes on TurboTax, they have a business option. That's all fair if you want to try that out. I have personally seen it go wrong multiple times, just because you think it's a software that it's going to get it right. It actually gets it wrong a good amount of the time, just because there's so much that the normal person doesn't know. TurboTax tries to ask you in a friendly manner, but it misses out on things, and especially with the OB3 coming out, they're slow to update everything. So it is quite possible that they miss a number of deductions for you. Also, if you're somebody that is paying estimated taxes to the federal government, normally you own a business or you have some type of side income where they're not withholding payroll tax, you want to make sure you are recalculating this every quarter, because the tax laws have changed, and so it can be very different than what you thought it was in Q1 and Q2. Q3 and Q4 could be very different. And yeah, that's how OB3 stands right now with California, unless they do change the conformity date on the bill. I mean, it's possible, but the way state normally works, they're slow to move, so I wouldn't hope on it. I would just go forward thinking that California is not going to conform, and I would also get with a good tax preparer. That way they can guide you through all these changes, stay on top of it for you, and let you know what you need to do. Let you know that there are these opportunities, because not all tax preparers are the same. Some don't keep up with the stuff. Some won't know about these deductions that you can get. They'll just put it into the software, kind of give you the bill. So if you need any help, please feel free to reach out, book a call with me. I'd be more than happy to talk to you, see how I can help you out.